Hello, and welcome to this week's Motor Trade Radio podcast, powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters from across the franchised and independent dealer sectors.
Well, that was the bank holiday, and there's a lot of people, I think, Curtis, on holiday at the minute still. I think
Yes.
like last week, there's a lot of out of offices, and I think that's continued through this week.
Yeah, no one is around this week. They're absolutely maxing out on those bank holidays and taking this week off.
They are, aren't they?
Yeah, and what a good move as well, because we've already had the hottest day of the year, haven't we?
Yeah, I think some people were quite glad of some sunshine. We seem to have some moorland fires this week, which was a bit odd, considering the amount of hot weather we have actually had to get some moorland fires. But
they've obviously dried out.
But no, it's been a busy old week again, Curtis, as we know. Quite a bit hitting the headlines, even though we've a lot of people on holiday, but it doesn't stop the new car figures coming out or the new commercial vehicle figures coming out.
No, we'll get on to those in a minute, because there's a lot to unpick from this month's registrations. The look at the March plate change, obviously the key month of the year. So we've got a lot of detail on what drove the market in March. But before we get on to that, also in this show we've got Steve Whitton's latest Menable Moment. That will be in the second half, and focused on respect in the car retailing sector and also its effect on stable leadership. So looking forward to that one.
Yeah, and a bit of a selfless shout out, and if anybody's been on any of the media platforms that Astor Media actually own, which is Motor Trade News, Business Motoring, Business Vans and Leasing Broker Federation, they might have seen my head pop up once or twice, Curtis?
I did notice it several times, in fact.
Yes.
There's no escape. But you've got a webinar coming up next Tuesday. So what's that all about?
We have, So it's ahead of our launch of the next issue of the Insight Quarterly, which we do self-promote on this podcast every now and again. Which is looking at the new and used forecast for the year and looking out for the next 4 years, but also content from Steve Young, friend of the podcast, ICDP, Market Check with Alistair Campbell from Market Check there. We've got Lee Swinard from Interpath in there, and Chris Green from Reddit, who we know from the podcast as well. But this webinar is being run by Astor Media. It's a live webinar. Lee Swinard from Interpath is going to be joining me on the panel there. And Jessica will be chatting to Lee and I about the new and used market, electrification, the Middle East conflicts, impact on UK automotive, etc. So about an hour of chit-chat about the whole world of automotive. So that's what they're promoting there. So I think there's currently around 60, 70 people have registered for it.
Definitely one not to miss. What time does that start?
11 till 12, Tuesday the 14th. We'll put a link on the newsletter on Monday for anybody that hasn't logged onto any of those medias and seen my mush pop up. But there is, it's a live webinar, unlimited attendance, Q&A session throughout, and more of a discussion. So don't expect to join it and just sit there watching a lot of slides, because that's not what it's about. It's about the discussion and debate, Q&As that we're looking at doing.
You're listening to all the chatter that matters on the Motor Trade Radio podcast, powered by Motors and Cazoo. If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers and decision makers on one of our supplier special episodes, then get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured in our Supplier Special series include Autoglim Lifeshine, Impel, Prospecting Dynamics, ETT, Generational, and MTC. You can find them and many more in your podcast feed, along with our recent OEM specials with new EV brands Verizon, Ion, and Shangan. If you'd like us to profile your business, then just message us at motortraderadio@yahoo.com.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
Headlines this week come from AM Car Dealer, Motor Trader, and Motor Trade News. Starting with, the new car market sees a welcome March 26 plate boost with retail registrations up and record EV demand. As part of our roundup of the plate change, we'll take a special look at the new entrant Chinese brands, many of whom had an exceptional month in March. Philip also has his monthly review of key European markets. While it was a good month for car registrations, the van market actually dropped by 3.6%, with electric vans tumbling 16%, which the SMMT described as deeply concerning. So we'll take a look at that. And we'll finish the first half with a roundup of some of the key trends that drove the used car market in March. Then after the break, we'll look at new research revealing the impact that distance used car selling is having on both after sales and customer retention. And we'll finish off with two business stories looking at MotoNovo's decision to pull out of the UK following the FCA's redress scheme and the latest year ends from Allen Ford.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
So, as Curtis said, that that's a busy lineup of headlines, but we'll start off with the new car registration figures and cover the story in AM Online. This is the new car market sees March boost with record EV demand, and this is obviously on the back of a significant increase in registrations for the month of March to 380,627, which is a result of 6.6% increase on volume for last year, but really focusing on some of the trends of the sales channel intake, Curtis, of that private registrations versus fleet and business, and also by fuel type as well.
Yeah, there's plenty to unpick. It was a good solid month, and as we alluded to last week, there was a lot of activity in the last couple of days of the month, but not letting that detract from what was a good positive showing for March. So, as you say, private retail markets very strong. It was up 10.1%. Taking a 42.7% market share. The fleet market was also up 3.5% growth, taking a 55% market share. And the business market, which is for businesses with fewer than 25 vehicles, that was up 18.8% to take a 2.4% market share. So registrations up across all three sectors, which is something we haven't been able to say for a little while on the pod.
No. And obviously, I think some of this is coming from a low base point. I think particularly the questions around the private, because it's still quite low in comparison to pre-pandemic levels of market share. But it's good that sector has seen a bit of an uptick, as you say, that 10.1% up to 162,000. Just over 162,000 registrations. So, for the dealer network and the OEMs, it's normally, and I say normally, it's not in all cases, a more profitable channel for the dealers and the manufacturers. So it's good to see the uptick there. But again, talking about the fuel types, battery electric vehicles, volumes were up 24.2% year on year, taking a market share of 22.6%. which is a monthly record from what the records show. Plug-in hybrids, volumes up 46.9% year on year, taking a market share of 13%, and hybrid vehicles or hybrid electric vehicles, volumes up 7.3% year on year, and they took a market share of 15.8%. So yes, there's questions around, the ZEV mandate target for this year still. We're still fairly short of that figure. But positively, it's a good uptick and a good market share for battery electric vehicles.
Yeah, and looking at because we can now look at the first quarter as a whole. So within that, battery electric vehicles market share is 22.4%, and that's up from 20.7% last year, and that's actually an increase of 14.5% year on year. PHEVs have a 12.8% market share in the first quarter, up from 9% last year, and hybrids have a 14.9% market share, just marginally up year on year for them. But it is showing the increase in battery electric vehicles, but, and it's a big but, it's still a long way adrift of the 33% mandated by the ZEV mandate requirements.
Yeah, and just finally, before we get on to a bit of the analysis around the manufacturers, that the JQ7 tops the registration chart in the month of March, doesn't it?
Yeah, so I mean, for the first time, JQ was the top-selling car, but also in the year to date, it is number 2, just behind the Ford Puma. So just looking at the March top sellers, number 10 was the BMW 1 Series, number 9 the Tesla Model Y. Number 8 Volkswagen Golf, number 7 MG HS. Number 6, the Volvo XC40. Number 5, Vauxhall Corsa. Number 4, Kia Sportage. Number 3, the Nissan Qashqai. Number 2, the Ford Puma. And as you say, the JQ7 number 1 with 10,064 units registered over the course of March.
Yeah, what a result that is for JQ. And I know Victor Chang's quite pleased with that one and the team at JQ, if you've seen any of their posts on the social channels. But digging a little bit deeper into the registrations by manufacturing, you and I both know Harry Bott, who's the director at MediaHawk, and hi Harry, I know you're a friend and a listener of the podcast, and he does some great analysis of the new car results when they become available. And you picked on his post this week, didn't you, following the results of the March registrations?
Yeah, if you don't follow Harry Bott on LinkedIn, then do search him out, because he puts together this monthly analysis, really drilling down and looking specifically at some of the Chinese brands and the new entrant brands and the impact they're having on the new car market. Now, I had a very quick look at the SMMT stats, just looking at the sort of winners and losers for the month, and pretty much all of the Chinese brands were winners. They were up year on year, quite considerably in some cases. So what Harry's done this month, and it's particularly significant because of the plate change, is look at the penetration of the Chinese brands. And as he says in his post, the headline numbers are striking, because whilst the overall UK market grew by 5.9% in the year to date, Chinese brands increased their total share from 14% last year to 18% in the year to date in 2026. And in March alone, they reached 19%. So it's really highlighting the rate of growth of these Chinese brands.
Yeah, no, and I think that's the thing with it. I think sometimes people forget, MG being in there alongside, your Polestar, in terms of those volumes in the marketplace, and now with the Chery, the JQ Roda, the Geely, the Shangangs, the Xiaomis, you name it, and more on the way. But it is really disrupting that market share, isn't it, in terms of volume and stuff. And you can see where that it is severely accelerating. But there were sadly some losers in March, and just some of those losers, Jaguar, year on year are down 99.6%. You can understand why with that one in terms of little or no product in the market. DS down 76.8%, Fiat down 60.5%, Seat down 30.5%, Nissan down 12.7%, and Volkswagen down 11.6%, followed by Peugeot down 12.3%. But as you say, alongside what you were saying earlier, though, Curtis, Mini's up 7.6%, Skoda up 8.2%, Suzuki had a good month,
They had a cracking month.
Great result.
Yeah, 67%.
Great performance for that. So some great results in those numbers. But as Curtis said there, if you don't follow Harry Bott, I suggest you do. And he does some, I say, great analysis of the market and just puts that extra view on the results there. But finally, before we move on to the commercial vehicle market, just some international or European numbers for you. Germany was up 16% to 294,200. France was up 12.9% to 173,600. Italy, 7.6% up to 185,400. And Spain up 11.7% up to 130,300. So, across Europe, in general, had a very positive double-digit growth for the month of March.
It's intriguing, isn't it? Because all strong showings there from the different European markets. But when you compare it with the rate of growth in the UK, they've pretty much all outperformed the UK. And this is our big month. This is our big plate change month. So some interesting dynamics going on there.
For definite. So going over to Motor Trader now, and this is around the results for the light commercial vehicles, but this is electric van sales take a 16% hit in the month of March, and they're saying that the LCV sector in the UK fell 3.4% in March, with 49,505 vans, pickups, and four-wheel drives joining the road. So, not the greatest result again for commercial vehicles in the month of March.
No, and this report from Motor Trader points out that this is the weakest new number plates March since 2023, driven by a sharp fall in new pickup registrations, which are actually down 54% to just under 4,000 units. And it goes on to say that March also saw that 16% decline in battery electric vans, which the SMMT is flagging up as a concern. So battery electric van demand has actually risen by 4.3% across the first quarter of this year, representing 9% of the overall market, a third of the 24% share mandated for the year. So back to the ZEV mandate. So, considerable underperformance there.
And heading back to Motor Trade news again, I know this is something that you've been involved with, Curtis, that used cars selling faster as prices reduce in March. And this is that the average used car sold in 25 days in March, with prices averaging 17,556, which is the lowest figure since July 2025.
Yeah, so this is just rounding off our look at the March market, and as you say, this is focused on the used market, and based on the market view that's produced by Cazoo and Motors, which looks at all the main car retailing trends over the course of the month. And some of the data shows that sale speed for used cars, days to sell, improved across all dealer types, with franchise dealers selling in 18 days on average, car supermarkets in 20 days, and independents in 43 days. So some good performances there. And looking at some of the sales volumes, car supermarkets actually increased their volumes by 24% month on month and 25% year on year, while franchise dealers achieved a 17% month on month and a 7% year 7% year on year increase. So just showing how stocks actually grew in March. And I think we had the almost like a perfect storm, because whilst those stocks grew, prices came down, demand was up. So there were some very good results across the sector.
Yeah, and obviously with the Middle East conflict, people are watching prices of the ICE versus hybrid and plug-in hybrid and EV very closely at the minute, aren't they, Curtis, to try and see what trends and results are playing out as the pump prices fluctuate, and people are expected to turn to EVs or hybrids as an alternative fuel type.
Yeah, most definitely. And if you do want more details on the market view, we'll put a link into the market view on the newsletter that goes out Monday morning.
Yeah, definitely. It's always worth having a look at. And just to finish that off, there's a great quote at the end there from Lucy Tugby, who's the marketing director there at Cazoo and Motors, that said that the ongoing price realignment of EVs is making them an affordable consideration for more buyers. This is reflected in the growing volumes being listed on their platforms, with March seeing an increase in models from new entrant brands such as JQ and Chery, as well as established players such as Tesla. So really saying that that market is starting to shift, particularly in that classified advertised space.
Yeah, and we're starting to see those volumes coming through, because we were talking about new entrants and the impact they're having on the new car market. Well, we're starting to really see those volumes appearing in the used market now.
Yes, so after the short break, we'll be back with the rest of the headlines after this week's Menable Moments from our friend Stephen Whitton.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors and Cazoo. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media. Next up is our latest Menable Moment, looking at mental wealth and well-being best practices in the automotive sector, with me, Stephen Whitton. Hi everyone, it's Menable Moments time. Hope you're well. Hope you're enjoying the little burst of spring that we've had in the last week or so. And just a very quick Menable Moments this time, because what I want to draw your attention to is something that I posted about earlier this week that was prompted by another post from a great guy in the industry, very well-respected CEO, Gavin White from Autotech. So a little bit of a shout out to him. And what he was saying in there was, apart from actually the post was about just how difficult it is, I nearly said another word then, how difficult it is to, or seemingly to, buy a car these days. And go off and look at his post if you want to see what he describes there. But the key bit in it that I referenced in the post that prompted from me was his use of the words, "we're all under the cosh." And I thought, do you know what? Massive respect to the guy, because that's the kind of honesty that I, if I was an employee, would want to see. Not from a kind of, oh, we're all doomed kind of perspective, but from a perspective of, we're all in this together. And that would massively, and has done, massively raise my respect for that individual. And so as I wrote a post that was referencing it, I found myself homing in on that word, that one word, respect. Because, as we all know, respect has to be earned. It's not something that just comes with the territory. It certainly isn't something that just comes because you have the role or the position or your level of seniority. And whilst you want to rev your team up and make sure that they are all motivated and so on, the recognition that the pressure is on really does say to your team, hey, we're all in this together and I've got your back, but I need you to have my back as well. And this is where the mission critical mindset thinking sort of comes alive, because that is where performance meets how your people show up. And that's about how they feel, how they think about themselves, and what's going on for them. So, again, we are all in this together, and let's do what we need to do to bring out people's sense of purpose and service and loyalty. And for me, a key part of that is about mission critical mindset. And as I said in the post, I personally don't believe that any amount of mental health first aiders or QR codes on toilet walls will fill the gap that is created by unsafe, unstable leadership. And you've only got to watch the news to know what that looks like. Anyway, let's get your team talking. And if you're a CEO and you want to rev your team up and also get them working better under pressure, which, let's face it, we are all under, then give me a shout. You know how to get hold of me, stephen.whitton@menable.org. Many thanks. I'll catch up with you soon.
Hey, well, went political then.
Yeah, exactly. A great Menable moment there from Stephen Whitton. And what he really brings to the party, and I was talking to him during the week, I had a good catch up with him, is that he is from the industry, so he understands the industry so well because he's worked in dealerships. He knows the pressure that sales staff are under, as indeed managers. The pressure they're under. So no, I thought he encapsulated that really, really well.
He did, yeah. And I think, QR codes on toilet walls, don't know yet. I get what he's saying. But if you do want to get involved with supporting your business from that mental health and well-being, you very much do reach out to Stephen. He does support. He does training with businesses and getting businesses to think about, those other things like he was touching on there, that it's not as simple as putting a QR code on a poster in a toilet or, whatever that is. But, do get in touch with Stephen because he can help and support your business thinking about that well-being, which is all about retention of employees, making it a better work environment, etc. So, very worth having a conversation with Stephen if you can.
Yeah, definitely. So you can find him on LinkedIn or head over to menable.org online or email him at Stephen with a PH .whitton@menable.org.
And heading back to the headlines now and back to motor trade news. And this is that local buyers key to after-sales retention. This is from a work by JudgeService there, and saying that they found that 51% of buyers who live less than 5 miles away took out of a service plan and dropping to 40% for those travelling 10 to 25 miles away. So some good research this, thinking about the after-sales market and because it's key to the sector, isn't it?
Yeah, it is. It is. And I did work with Neil Adley, the chief exec of JudgeService, on this. So I did see the research, and the research was fascinating. And it's really looking at something that we all knew, already knew, but he's actually quantified it. And, the research has found that buyers of used cars are more likely to purchase after-sales products, such as service plans, if they are local to the dealership. But he's actually got the figures to back it up. So as you say, JudgeService found that 51% of buyers local to their dealerships who live less than 5 miles away took out a service plan, but that drops to 40% for those travelling 10 to 25 miles, and then 32% of buyers who live 25 to 50 miles from the dealership bought a service plan, as did 25% of those who live 50 miles from the supplying dealership. So it's I think the messaging behind this from Neil is don't be over reliant on distance selling, because yes, it's good for business to sell those cars, but you're probably not going to drive any work through the workshop through after sales if customers are coming from long distances. So don't become over reliant on them.
Yeah, and that's supported again with the results saying that the research also found that servicing is the biggest driver of retention. I mean, as 76% of repeat buyers stayed with the dealership that had serviced their previous car, and that 69% of used car buyers who were offered a service plan but do not buy it still use the dealership for servicing, compared to 47% who are not offered one. So really, that is there's one, like you say, that distance selling. You may never see that customer in your service department again, which actually reduces that chance of them buying another car from you in the future. So it is back to that local marketing, local servicing,
Yeah.
your local customer for retention.
Yeah, most definitely, and that I think that last stat is particularly interesting. That one about 69% of used car buyers who were offered a service plan but didn't actually take one out will still use the dealership for servicing. So it's sort of reinforcing that messaging about you're selling a car, you're selling a used car, because this is specifically about used cars. It's worth mentioning about servicing, service plans, and what the dealership can do for that customer through their ownership of that particular vehicle that's just been sold to them.
Yeah, definitely. So heading over to car dealer, and obviously last week we covered the announcement from the FCA for the redress, and we've seen probably quite a swift action on the back of that. And this is that MotoNovo owner to pull out of the UK in protest at FCA's deeply flawed redress scheme, saying that First Round Bank to sell UK car finance arm, and this is that MotoNovo owner hits out, as I said there, at a disproportionate and unfair FCA redress scheme, and that the lender has upped provision for handling claims to 750 million. I think previously was it 500? I think they'd.
Yeah, and you know what? Last week we were saying that this isn't the end of the redress scheme, and this story broke fairly soon after the announcement. It was after we recorded last week's show, but I think the story first appeared in the FT. So as you say, this is about MotoNovo owner First Rand Bank, a South African banking group. It's really hit out at the scheme announced by the FCA last week, labeling the model as being problematic. And it now says it aims to withdraw from the UK market by selling its subsidiary Aldermore, which actually owns the MotoNovo business here in the UK. And the lender confirmed the news in what was actually a lengthy statement to the Johannesburg Stock Exchange, and it is heavily quoted within the story. But it says it announced it was upping its provision to handling claims under the scheme, and the bank says it will take an additional £510 million provision to pay all motorists who are entitled to compensation, bringing the total, as you say, to £750 million.
Yeah, it's some big numbers in that,
Yeah.
and like you say, they've been fairly direct, haven't they, to the FCA's revised redress scheme, and they say they don't hold back on their view with the impact on the business. But there is a clause in statement here that the Aldermore board will work closely with First Rand and respective regulators to ensure an orderly ownership transition that will support Aldermore's growth ambitions going forward. In the meantime, the bank remains committed to its strategy to continue to drive significant positive outcomes for all of their stakeholders. So, obviously now they're looking out for who will take their book on, I suppose, their balance, and take that further forward.
Yes, yeah, and I guess there's got to be some front runners, and I'm sure those conversations are happening as we record this. So it's going to be interesting to see who picks up that book, and how much it costs as well.
Exactly. The discount rates maybe And finally, we're heading over to car dealer, and this is the dealer group. Allen Ford carries out restructure after slumping to hefty pre-tax loss, saying that Allen Ford swings to 12.5 million loss in 2025, and the bosses blame lower new vehicle retail volumes, weaker used car pricing and margins, and higher interest costs, and that the firm makes changes as it looks to exit loss-making lines of business and franchise relationships. So, this is a clear revision of what their strategy and plan is.
Yeah, definitely. And, Allen Ford, a major player in the UK, they're ranked 28 in the AM 100, based in Warwickshire, and they operate over 30 locations stretching across the south of England, into the southeast, and actually up to the Midlands, and employing over 1,000 staff. And whilst it has heavy Ford representation, it also represents Kia, Moda, Cazoo, Chery, and Maxus. So, a significant player. And, this figure represents a decline in profits on last year, because they're actually in profits 12 months ago, in profit by £3.5 million, with bosses actually citing lower vehicle retail volumes, weaker used vehicle pricing and margins, and higher interest costs. So that's quite a volatile mixture, isn't it?
It is, yeah, and I think it's just come at a very bad time, hasn't it, with all of those hitting. But they're obviously making action to change that, and there is a comment in the press release saying that the directors have started to see the initial benefit of these actions in the post-year-end trading and cash generation, and are expecting a return to profitability for the year ending 30th of June 2026 and continuing into 2027. So, these actions are already happening, and as I say, they are seeing immediate results of some of these actions that they're taking as a business.
Yeah, and the story, the car dealers report, does actually highlight what some of those actions are, because they include redundancies as well as exits from certain loss-making lines of business and franchise relationships. So a lot going on there at Allen Ford, but they seem to be pretty confident that that this next financial year will be a lot more positive.
Yeah, definitely. So hopefully we've covered majority of the big headlines this week, but things do change very quickly in the automotive world, as we all well know. As Curtis said there, all the links to the headlines and the more detail for the Cazoo Motors market view will be available on your newsletter on Monday morning. It goes out at 8 o'clock on Monday morning there. And if you do want to sign up for the webinar on Tuesday, the link will be on there as well for that. So say that's a free webinar. Please do feel free to join that. But I think we've covered everything this morning. So I'm sure the redress will continue, won't it, Curtis? We'll continue watching that one.
It will rumble on, no doubt about that. But that's all for now. So many thanks to you for listening to this Motor Trade Radio podcast. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors and Cazoo. We'll be sharing all the URLs from this week's headlines in our newsletter on Monday morning. To subscribe, just search LinkedIn for the Motor Trade Radio podcast.